Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing trading algorithms, the introduction. Almost all traders, novices and pros alike, know at least the basics of technical analysis. Still, not many know how to convert a trading idea into a set of rules and then test them for profitability. This video series aims to be an introduction to algorithms applied to trading. Even if you are not considering creating an EA trading robot, we think it is very interesting to be proficient in converting your trading idea into formal code and test it. We will use mostly pseudocode, but also Python, a very easy to learn but powerful high-level language, an easy language developed by TradeStation which is almost a pseudocode because it was designed to be read as a natural language. What is an algorithm? An algorithm is a set of rules to perform a task in a finite number of steps. Basically, an algorithm is a recipe. For example, if we were to create an algorithm to make a phone call manually, a possible solution could be as follows. Algorithm uses in trading. There are many ways to create algorithms for trading, including advanced sentiment analysis, evaluating the words used in trading forums and news releases. Still, we will focus on algorithms for historical price action data series. The ability to create, test, and evaluate a trading algorithm is a terrific ability to own. This allows creating market models that map and profit from the market's insufficiencies. If you happen to find one set of rules that historically made profits, it could likely continue making profits in the future. This is the basic premise of auto-mapped algos, expert advisors, and trading bots. Algorithm property inputs. 0 or more values can be externally supplied. Some algorithms don't need inputs. And of course, a trading algorithm will need to get timely data from the market to generate outputs. Outputs. At least one of our results should be delivered. That is logical. An output is not only text, it can be a picture, a sound, or a market trading order. Unambiguous. Each instruction must be explicit with a single meaning. Finite. It ends after a limited number of steps. The algorithm should precisely specify what the computer should do. Effective. Every instruction should be basic enough to be made by hand, or uses other algorithmic subunits with the same property. Of course, the action must be feasible, which means that the computer can perform that action because the instruction is included in the instruction set of the programming language you're using. The key to a good algorithm is, as with recipes, is to break down the ideas into simple building blocks. Flow diagrams. Algorithms can be more complicated than a simple recipe. Besides, a recipe is interpreted by a supposedly intelligent cooker. On the other hand, algorithms are to be interpreted by a brainless CPU. Besides, algorithms usually accept a stream of data inputs, which must be transformed until an output or output is produced. Flow diagrams is a pictorial representation of the algorithm's process of data flow. A flow diagram is a very handy tool to put your developed ideas into a coherent algorithm because it helps you to spot potential flaws and improvements and should be the first step before proceeding to the actual code. In the next chapters, we will continue developing this basic idea applied to trading using trading examples. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future or if you have any questions about this particular video. Have a great day.